before we jump right into today's business, I'm pleased to inform you that I have resumed my VIP signals and also my VIP mentorship. So if you wanna join, I'll put the link in the description box below. So please take a minute to subscribe and hit the notification bell so you won't miss out when there's an update. So without wasting much of your time, let's jump right into it. So we're going to start with the Volatility 50 index. So in the Volatility 50 index, we have a $6 account, so you can enter a lot of positions. But first of all, we have to do our analysis. So the first thing that we do is we have levels that we have to consider first. The first level is the area of confluence, the support line, but I've just put the line over there. This line was respected quite a number of times, as you can see, these areas that I'm marking. So these areas are very important because they are areas of confluence. And then we draw our trend lines. So remember, when you're drawing your trend line, you should connect the wicks, not the body, so that you can be accurate. Then we draw another trend line at the top that is marking the trailing resistance. These areas are very important because they tell you the trend of the market, whether the market is going downwards or upwards, or it is choppy or ranging. Then if we zoom in, we can identify that there was a double bottom that was formed, as you can see where I'm putting the order block. So at this area, the market failed to break to the downside. And then we put an order block that is marking the neckline. So we are aiming for a buy signal. So with a $6 account, we cannot put a lot of positions. As you can see, it allowed us only 2 positions. So we're just going to hold these 2 positions and see how much we can get from this one. So I'm pretty sure by now you guys can trade a double bottom using my strategy. So as you can see, after some time we are in $5 each, but we are still going to continue holding. So at this one I started at $6 because it is quite difficult to raise a small account from cents. Although it might be possible, it is very difficult. Raising an account is very difficult, even if you are a trading pro. Sometimes the market can be harsh to everybody and then you can just lose, even if you're sure. So accepting that everyone can make a loss in the forex market is a very good step and a very important step to note when you are in your trading journey. So in terms of take profit, let's just put it at the area of confluence that is very immediate. As you can see at that point, it is an area of confluence, as it was a support that became a resistance. We are still in $5 each and we are going. So I'm adjusting my TP to the next TP. so that I can collect more profit. And then now we are in $9 each. We're going to continue holding. As you can see, the market is headed towards that neckline. We are still going. So I'm aiming for this price to reach my TP while I'm still recording, so that you guys can see the market hitting my TP. But then, you know, since the market is manipulated, sometimes it fails to reach that TP. So sometimes you just have to close manually. As soon as you realize that you have collected enough profit, you just have to close and then leave the market. Now we're in $40 equity, which is a lot. Let's see if we can hit our TP. So it's failing to reach our TP. Let's wait for it and see if it is going to reach that take profit. If we go to the 1 minute time frame, as you can see, it's only one candlestick that can reach us at our TP. But then, you know, it's Forex. Sometimes it can just start going down at this point and it can even blow the account. So I would recommend that you just close manually. So it's failing to reach our take profit. As you can see, it is going down. So I'm thinking maybe it's actually better to close the market manually. I'm sure there are just cents, they wouldn't matter that much, but then it means we won't be in $40. Now I'm getting frustrated. Let me just close. And then now we are in $39.16, which is a lot. We had a $6 account. Let's look for other trades elsewhere. As you can see, the market failed to reach our TP, but then it was so close. Maybe it is going to reach that TP now that we are out, but we don't care anymore. So let's see what we can do with this $39 account. Let's look for other trades. Now we visit the Jump 50. So usually I use this Jump 50 to raise a very small account, but then it doesn't mean that we cannot trade a big account using this Jump 50. So the first thing that we do is we draw our trend line so that we can identify whether the market is bullish, bearish, or choppy. So these are very important things to note, because if you don't note these things, you can never identify the trend line. So as you can see, the market broke to the upside and then it came back into the market. So this is kind of a head and shoulders that is very complex. It is not symmetrical. This kind of head and shoulders is not that powerful. Sometimes it fails. So you cannot trade using only that head and shoulders, because it is very complex. It looks more like a Quasimodo, but then you don't have to trade using only that, because you have to trade it in conjunction with other setups or indicators. However, I've noticed that the market formed another trend inside the trend line. So at this point, it has reached the two resistance levels that were formed, which means that that area of resistance is very powerful. So we are looking for sell signals. So that is a very important area of resistance at the top. As you can see, it was respected and then the market came back into the trend line. So we are aiming for a very strong sell because the market is currently at 2.2 resistance points that are very massive. So at this point, it means that the market is not only respecting one resistance line but two. So I'm going to add more positions and see how much we can take from this trade. You will notice it only allowed me to put 2 positions. Let's minimize the lot and see. And then now we've put one more position. So now we have 3 positions. Let's see how much we can get from this one. So now we're in $2 profit. We're just going to continue holding. However, it is retesting, so if it was a very small account, and now looks like one other trade has been closed. So the market went high, so it kind of broke to the upside and then came back again. So it means that it almost blew my account. So it closed one position. Luckily the other position remained. Let's see if we can add more positions to that. So as you can see, now we are in $21 because it kind of closed one position that was big. And I'm going to show you the history because it closed one position that was, if that position had not been closed, we would be in more profit than we are right now. But then it's forex market, sometimes you just have to go full margin because that actually allows you to collect more profit. So in terms of take profit, let's just put it at an area of confluence. At this point, it is just below that area of confluence, that support line that is at the bottom. As you can see where I'm putting my take profits. As you can see, now we are in $17 profit. So I'm going to show you a history of that position that was closed. The market is still going. So as you can see, now we're in 63 equity, which is a lot. So you can either put more positions or just be satisfied with that profit that you have, but then the market is still going down. Now in $52 profit, the market is still going down. But however, you have to take note of that support line that is to the left side because it is going to be retested. So in the history, as you can see, the market closed that $17 loss. So if that $17 had not been closed, we would be in massive profit. But then it's the forex market really, and as you can see, those 2 positions that I made earlier, the 2 profits that I made earlier in the 50. But then that's the market. Sometimes you just have to contend, and please note that it's only when you are willing to lose that you can win. So now we're in 100. Let's close, and now we're in 105. So we are going to look for other trades elsewhere. So with this $105 account, we are just going to look for trades in Volatility 10. The first thing that we do is mark the areas of support and resistance by those order blocks, and then we put a trend line that is marking the trailing support. And then the next thing that we do is we put a support, a resistance at the top. So at this support, this resistance level is a point that is marking more like an ascending triangle. So this ascending triangle can break either to the upside or to the downside. So we are looking for sell signals at this point, because the market is at a point of resistance. As you can see, the market failed to break to that side, that upside. So we are going to sell. The market is a bit choppy at that point, which means the bulls are actually failing to break to the upside. So the bears are going to take over. However, we don't know when really they are going to take over, but then we're just going to stay in the market. When they take over, they will take over with us, and then we'll make the profit. And sometime later, now we are in $271 profit. As you can see, the market failed to break that upside, just as I had said, and it's still going down. So in terms of take profit, remember, just put it at the area of support, or the, in this case it's the area of support. So I'm going to adjust my positions to that take profit. Now we're in $400 profit, which is a lot. And then we close the market. Now we're in $486 account. So with this 486, let's look for trades in the Volatility 75. So this Volatility 75, there was sort of a rising wedge. So before we identify that rising wedge, let's identify the areas of support and the areas of resistance. These are very important, even though they may not aid in your trading, but they are very important to note. And then we'll put the trend lines. These trend lines mark the market direction. So this market is currently more like an uptrend. So this kind of market, we usually look for sell signals, because they usually break to the downside. So let's execute the market. Now we are in loss, $15 loss, but then we're just going to hold it and see if we can maximize on this one.
A few
and then
moments
sometime later, we then entered the market, and then it broke to the downside and went very low. And now we're in 4,300 profit. So I took some time off the markets, and I just came back to see that I had made a lot of profit. So I was kind of busy, so I couldn't reach the market regularly. However, the market broke to the downside. As you can see, it broke really big, and then I made a lot of profit. So this is the kind of setup that you would want, that can just give you a lot of profit, and then you can just close the market. Now you're in 5,304, which is a lot, and then it will be safer to leave the market. So let me know what you think in the comment section below. Please do not forget to subscribe, hit the notification bell so you won't miss out when there's an update.